All right, good morning. Welcome back. It's Monday, May 19th, 2025. Waiting for the market to open. Um, and I am doing my second round of the 9 EMA strategy. Friday, I took 3 trades. They were all losers. I lost $274 last Friday. This is my second go around using the 9 EMA strategy. And to repeat, here's the 9 EMA, this blue line. The strategy is 2 green candles above, I buy calls. 2 red candles below, I buy puts. And I stay in that trade. My stop loss is if I'm long, a red candle closing below the 9 EMA, I get out, or I get out at a $200 loss. And reverse for if I'm in puts. And I made a bunch of mistakes the first go around, and I'm doing 20 trades with this strategy. Where did I get the 20 trades from? Mark Douglas's book, Trading in the Zone. At the end of the book, he tells you to pick a strategy that is completely objective, no subjective criteria. And the whole point is to eliminate emotion. Just trade on the strategy, and that's it. And of course, I like to let the first 20 or 30 minutes of the market open just play out before I start taking trades. Um, and I'm on the second round. I've taken 20 trades, got 17 trades to go practicing this strategy. Let's see when the market opens. And the market is open. And here you have the typical up, down, up, down, up, down beginning, which I like to stay away from. All right, so we had a nice initial run up. Okay. Obviously, I missed that because I'm not taking part in the first 20 to 30 minutes of the market open. Um, we'll see what happens if I end up with a trade somewhere. Right now, the market is a nice ways above the 9 EMA. All right, so we had a nice run up the first 30 minutes of the market open. You see, right before the market open, we got above the 9 EMA. And this is really something that you would love to see somewhere else in a day, but I just have a rule. I don't like to trade the first 20 or 30 minutes. And there's always a pullback to the 9 EMA, and it'll probably hold here. So I don't know if I'm going to get a trade off, at least not now. There's always a pullback to that 9 EMA. At this point, I'm looking for price action to fall below the 9 EMA, and then either have 2 red candles below and buy puts, or have it come back above the 9 EMA with 2 green candles. But we'll see what happens. All right, we got 1 red candle below the 9 EMA. We will see what's going to happen if we can get another one. We will see. All right. We just went long on puts. We are on the May 23rd, 592 puts at $4.55. I bought 5 of them. So we had these 2 red candles close below the 9 EMA. Once I saw this candle pop up, that's when I went long on 5 puts. All right. So I had a $200 loss on that trade. I had to get out. So that's my stop loss. Either a green candle closes above when I'm in puts, or I'm down 200. So I was down 200 and I closed that trade. Wait for the next setup. All right, so we got one green candle closed above. If we get another one, then I'll go long on calls. I hope you see that that was a good trade for me to get out at the loss that I had. You got to keep your losses small. You got to stick to your stop losses, because if I had stayed in the trade hoping that it would come back, I would have lost even more. So you have to stick to your stop losses. If you keep your losses small, one of these times you're going to get a run like this, and your wins will far outpace your losses, but only if you keep them small. So I hope you're learning a lot from me risking my money so that you can learn and I could make these videos. So if you're new here watching this, please subscribe and give it a like. Right, I'm risking my money to show you what life as a new day trader is like, and I'll show you my trades when I'm done trading for the day. I'll go over to my Schwab account and show you my trades. So far today, I've taken a $191 loss. So we got one green candle closed above. We get another one. I have my order all ready to go long on 5 calls. Okay, we have one red candle closed below. We get another one. I'm going to go in the other direction. I'm going to buy puts. And the volume's really dropped off. You can see down here the volume bars. It's really dropped off. Market's kind of balanced, just trading in this range right now. There's nothing on the economic calendar today, really. And really, there's nothing on the economic calendar for the rest of the week. The only big news that I saw today was that the 30-year bond is now over 5%. So we'll see what happens here. All right, we might get a second candle closing below the 9 EMA. Okay, I'm long 5 puts. The 591 puts at 407. Let's see what happens. Well, that was close. I almost had this candle close above the 9 EMA, at which point I would have gotten out of this trade. Or if I had been down 200, I wouldn't have gotten out. But none of that happened. So we're still in this trade. I like that we got this nice long upper wick up here. So sellers stepped in, but the volume down here wasn't very encouraging. So kind of a mixed signal there. If I can get a push below here, where we had some support earlier, if I can get a push below this, I think we can get down to VWAP at least, and then maybe get down to the low of the day. Hoping, wishing. We'll see what happens. But as you can see, the volume down here is really not very encouraging in either direction. At the moment, I'm down about $45 on this trade. Let's see if the sellers can come in and save this trade for me and get this candle back below the 9 EMA. Sellers stepped in over here. I'm hoping they can do it again. But if this candle closes green above this 9 EMA, I'm out of this trade. All right, I'm out of that trade. Yeah, that was about a $50 loss. All right, so that's a second loser in a row. One more and close down for the day. We'll see what happens. All right, I'm long calls again. The 593s. 593s at 445. Long five called. All right, now I'm looking for the market to get above high up day, which is right here. Yeah, we are stuck right in this channel here. This is something. We're just sitting in here. You usually don't see such a narrow channel. The market sitting in a narrow channel in the middle of the day. You usually only see that in the middle of the day on FOMC day. Still in this trade. 1, 2, 3, 4 red candles that were at one point below the 9 EMA, but still managed to close above it. So it's a bullish to me. We got these nice lower wicks, but we're just trading in this lousy range here, this very narrow range. The market just moved up right up into this range at the open, and it's just sat here. So I'm still in this trade. All right, I'm out of that trade. That's my third losing trade in a row. So I'm gonna shut down. But I'll recap my trades here in a second. I'll show you my Schwab account. So here, bought puts here. Got stopped out of that. Bought puts again. Got stopped out of that. Bought calls right here, and got stopped out here on this candle. Just not much happening today. It's one of those crappy trading days where the price action stinks. The volume is awful. So we'll be back tomorrow to do battle, but I'll wrap up my trades in 1 second. All right, so here's my 3 trades today. Down at the bottom, bought 5 puts at 455. Got stopped out at 418 for $191.61 loss. This number here, right? These 331, 330, those are the commissions. Then I went in again, bought 5 puts at 407, got stopped out at 379. That was a $146.61 loss. And then I went long on calls at 445, got stopped out at 433. I had that one red candle close below the 9 EMA. That was a $66.61 loss. So total loss today is 404.83. And I have my rule: 3 losing trades in a row, I shut down. So I hope you're learning a lot from this. You're seeing what trading is like. I'm not worried about these losses. I'm keeping them small. I know a guy who's a very good trader who in April, the last 2 weeks of April, he took 18 losing trades in a row, and his average loss was about a little over $2,800. He lost $51,000 in the last 2 weeks of April. But he was up something like 90,000 the first 2 weeks. So he ended up having a positive month of like I don't know, 39, 40,000 dollars in the month of April. And the only reason he could do that is because for his account, he's trading in, I don't know, like $150,000 account. He's keeping his trades losses small. and that's why he still ended up in the green for the month. So I'm 6 trades in on my second try around of a 20 trade experiment, um, from Mark Douglas's book, Trading in the Zone. Um, it's an exercise in eliminating emotion from your trading. Um, and so we'll see what happens tomorrow. All right, subscribe to the channel, give it a like, share it, comment, tell me how much you're enjoying watching me lose money. Or you're enjoying learning something about trading, um, by someone who's risking their own money to teach you what it's like. And it's like this for everybody. You know, when you're starting out day trading, everyone goes through this. Everyone blows up their account. Um, I wouldn't call what happened to me my first year of trading as blowing up my account, but I lost $14,000 the first year. That's not really blowing up my account, but I know guys who are really good traders now, been doing this, 8 or 10 years. And their first year they lost, 35 or $50,000. Anyone who's a legitimate trader out there who's posting videos on YouTube, they'll tell you the early years are hard. You have to get screen time. You got to learn from all your mistakes. And I was lucky, to find guys on YouTube who are honest about their trading. They're not making videos. Oh, I I win on every trade. There's videos like that. Those guys are just full of it. They're liars. Nobody wins on every trade. Um, Nobody makes $1 million their first year trading. It's BS. It's BS. Um, I'm hoping to show you what it's really like, trading. All right, I'll see you in the next video. Please subscribe to the channel.